Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today we're going to be going over a couple of different charts, including the DXY, the gold chart, as well as some of the crypto charts. But the crypto market continues to face headwinds, and traders have been completely unable to push prices higher, although there have been some brief relief rallies. Momentum's pretty weak across most of the major assets, which means there could be some potential consolidation ahead. Global markets are showing instability, liquidity tightening. It's becoming clear that smart money has already been preparing for what we're likely going to see next. But the only question is, which direction is that move going to be? Because smart money is always one step ahead. They're always in the right gear. They're always ready when those shifts do occur. And 99% of the time, it's retail that's the one that gets caught slipping. And it's very likely that that's exactly what we're going to see happen again. So let's not waste any more time and let's get into the charts. If you're looking for a place to trade spot, or if you're just looking for a place to save some coin in regard to swapping your cryptocurrencies for zero fee, definitely take a look at BitUnix. It's the only place I trade, and it's the only place I swap my cryptos. You'll be glad that you did. Now, first off, taking a look at the DXY, this is the daily chart. This is something I've been talking about off and on for about the last month. Because once we bounced off of this bottom right down here, giving us the second point to form this lower trend line, the dollar has been gaining momentum and gaining strength. Even though we've been seeing a historic run in precious metals, particularly starting off with platinum, in gold, and we've also been seeing recently a major move in silver, the Dixie has gradually been gaining ground and sneaking up behind everybody. And why everybody's been distracted looking at the shiny metals, a lot of people have been ignoring the DXY, and it looks to be setting up for what could become an incredible move to the upside. Price broke above the upper trend line, dropped below here as it was forming this bearish hidden divergence, which you can see right here on price and right here in the indicator, but it did not get much of a push, just a little bit of action to the downside, barely even phasing price. And you can now see that right here on the Gaussian channel, it has actually started to turn green, which if we look at the chart, the Gaussian channel has not been green since March of 2025. As soon as this thing flipped red right here, we basically collapsed. And with the Gaussian channel turning green, it's certainly not a guarantee that we're going to see some kind of a historic run with the dollar, but it definitely doesn't negate it either. And when we look at what we're seeing here in the charts, we have one small imbalance right here at about 97.87. But when we look above the current price, we have a gap here at 100.96, a volume imbalance here at 101.76, and a massive volume imbalance here centered at about $3.4, all of which remain unfilled. And if price does start to break out to the upside, which is looking very likely, it is going to target every one of these imbalances. And with it currently trading below the equilibrium zone, which if we flip over to the weekly chart really quick, we can see here that it has not traded above since around the same time in March 2025 when the Gaussian channel turned red on the daily chart. Beyond that, it was trading below it for quite some time, or within it in these areas you can see here, but we had a brief window where we traded above right back here, peaking out going back to September 26th of 2022. So overall, looking at the chart, you can see that after this incredible rally heading up into 2022, price basically consolidated with one last little push to the upside here before collapsing to the downside where we are here now. I guarantee you, the algorithm is looking at these imbalances, and in my opinion, it's very likely that if the price does start to move up, it's going to fill every single one of these, which would be very bad for gold, silver, platinum, palladium, and basically every cryptocurrency you can name, with the exception of a few individual projects that might have breakthroughs which could affect the price in a positive manner. But the dollar rising is going to put pressure on basically every commodity. And as I've been saying for quite some time, I do believe and continue to believe that watching the DXY is the most important chart to watch of them all. Because if the dollar's rising, it doesn't matter what Bitcoin dominance is doing. Now, I do believe that gold, silver, platinum, palladium are great investments moving forward. But we're not talking about the short term here. We're not talking about a great investment over the next month, not even over the next year. Gold, silver, platinum, and palladium are likely going to be good investments over the next 5 to 10 years, perhaps even more. But most people look at this in terms of short term. We've started to finally see this pullback right here, which is the first pullback we have seen in gold since breaking out right here, going back into August. This part of the chart that we see right here is when we started to see all the lines of people around the globe lining up at bullion dealers trying to get their hands on some gold and silver. So once retail finally started to realize what they were dealing with, we finally started to get the first pullback, because retail is always the last one to the party. Now, if we jump over to the weekly chart, we can get a much better perspective of exactly what we're dealing with here in terms of gold. Now, back when gold was trading down here at the lows in October of 2022, retail wanted nothing to do with gold. And as price started to move up here, retail didn't want gold. Retail didn't want gold. They didn't want it. They didn't want it. They ignored it. They didn't want gold. They didn't want gold. Holy cow, we've got to get some gold. And it's just funny to think that retail didn't actually start to show any interest in buying gold until it was already pushing up here towards these highs. Another thing to keep in mind, which is a very, very important topic, which I've been talking about from time to time in some of my posts, is this gap right here that's resting on the daily chart, which is centered at about $3,460, because this gap has still not been filled. The last gap that we saw on the chart was right here, and it was filled instantly within the next week. And if you go back on the gold charts, you will see that there's very few times where we see a gap in the gold chart. But when we do, it is almost always filled. With this gap remaining considerably lower than the current price we're trading at $4,000, and way cheaper than what we saw here at the peak, around $4,400 per ounce, if we do see the dollar start to gain momentum, it could push the gold price right down into this gap and fill it. So when everybody was sitting there waiting in these long lines trying to buy gold coins, they should have been patient, because there's a very good chance that everybody who was paying the super high premiums and buying gold up above $4,000 an ounce is going to get an opportunity to buy it for a little bit cheaper. So what we could see would be a perfect storm where the dollar starts to gain momentum, becoming bullish, gaining in value. At the same time, we start to see gold pushed down into this gap. As the dollar starts to fill those upper gaps, gold starts to push down into this lower gap. But the more strength, the more momentum, the more value that the dollar gains, the more pressure we're going to see on all of these commodities, including cryptocurrencies, which, as we've seen lately, have all seemed to stall out. Now, that doesn't mean that this necessarily has to happen, but you definitely want to keep your eye on the dollar, because if the dollar starts to weaken, we're going to see crypto and precious metals rise in price. But if the dollar starts to go on an epic run to the upside, working on filling those gaps and those volume imbalances, commodities are going to be under an incredible amount of pressure. But the good thing is, in times when they're under pressure, they present great buying opportunities for the people who are patient. Just like Warren Buffett says, money transfers from impatient hands to patient hands. And if we do see a time here where commodities move into a bear market and start pushing down for perhaps the next year, year and a half, it's going to present great buying opportunities. I'm not saying that's going to happen, but it's definitely something you want to keep your eye on. Now, in regard to cryptocurrencies, it almost doesn't even matter which one of the ISO 222 tokens you're looking at. We're all seeing the same chart pattern. Taking a look here at XRP, we saw the flash crash, a pretty big recovery, and price has basically been trading within the equilibrium zone ever since. Now, this pattern that we're seeing here, in my opinion, is basically just a coin flip. We could see this thing move to the downside, coming down here to this bullish order block. We could see price move to the upside, but as it sits right now, it is literally 50-50. XLM showing the exact same pattern. Flash crash. Decent recovery, trading below the equilibrium zone, within this nice, defined channel right here, trading to the downside. We definitely don't want to see price break below this lower trend line. The exact same thing with HBAR, trading well below the equilibrium zone, having been rejected off of this bearish fair value gap on 2 occasions. It is also trading within this well-defined channel. Same thing as XLM, we don't want to see it take out this lower trend line. Almost the identical pattern with ALGO, trading below the equilibrium zone, rejected off of this bearish SIBI on 2 separate occasions, trading within a well-defined channel towards the bottom side. We don't want to see it break below this lower trend line. An identical pattern flipping over to ALGO, trading below the equilibrium zone, rejected off of this bearish SIBI. This pattern is more of an ascending wedge type of a pattern, which price has broken below. This will be one to watch because it could give us some clues. If price does recover, be watching for a potential rejection off of this lower trend line. That could give us clues to what we could see throughout the rest of the crypto market, as it does have a different pattern than what we've seen in the other cryptocurrencies in terms of the channel. So mark this one on your chart as one to watch for this lower trend line rejection, but it is also trading below equilibrium and has been rejected off of this same bearish fair value gap on 2 separate occasions. Looking at quant, trading below equilibrium, trading within a well-defined channel. It does have a bearish fair value gap right here, which is not marked on this chart for some reason. Right here. Having only been rejected off of that area on 1 occasion, and is being supported by this bullish fair value gap, currently centered about that 78.5 range. Same thing, we don't want to see it lose this lower trend line. We definitely don't want to see it break below this bullish fair value gap. In regard to most of the ISO 222 coins, XDC kind of stands on its own, as it really hasn't been trading with the group for quite some time. It's also displaying a bearish fair value gap right here on the chart, having been rejected on 1 previous occasion. But even with the flash crash we've seen here, XDC has been trading well below the equilibrium zone, going all the way back here from its last rejection back at the end of July. So you definitely want to see it hold this bullish order block, but all in all, XDC has been by far the most bearish in terms of the chart pattern. IOTA has a very similar pattern, trading well below the equilibrium zone, being rejected off of this bearish SIBI here on 2 separate occasions. Is being supported by this bullish fair value gap on the weekly and is trading slightly below the trend line that formed right here, going all the way back into December of 2024, which it was trading above for quite some time, but since the flash crash has basically just been consolidating below it. COREUM looks very similar to what we saw on XDC, trading well below the equilibrium zone, has been in a downward trajectory on a similar timeline to the XDC chart, basically trending straight down ever since, and is now trading within this bullish fair value gap on the daily chart, centered at about 8 1/3 of a cent. You can also see from the candles that it's been pretty weak action coming through here. Even though they're red, they're just very, very weak candles. Not like what we were seeing back here. So all in all, we definitely want to keep our eye on the dollar right now, more than any other chart. If you're more of a crypto buff, then keep your eye on the stablecoin dominance chart. Because if the dollar starts to break to the upside, we could be in some serious trouble holding commodities, holding cryptos. But that's something we'll have to watch and see. For me, it doesn't really matter because I'm a long-term holder. I have ceased all of the short-term trading currently, have been taking steps to protect my long-term holdings by spreading everything out through multiple wallets, by strengthening passphrases, and backing up all of the seed phrases, basically just prepping for what could become quite a storm. And after what we saw with that person on YouTube recently, I cannot remember what his name is. It seemed like his last name was LaRoque, who had about $3 million worth of XRP stolen from him. That really got my butt in gear to where I started to make all of these changes with my holdings, spreading them out through multiple wallets, which I had already been doing, but I just took it to a higher degree. Different types of wallets, making sure all the seed phrases were backed up, making sure all of my crypto was offline, off exchanges, with the exception of a position that I'm currently building with Telcoin by using spot. But other than that, I shifted my strategy to one of security. And even though I have always had security at the top of my strategy, I decided to take it even higher. So this way, even if a wallet or two becomes compromised, they're only taking a small fraction of my overall holdings. And by stepping up the passphrases to a whole new level, it just makes them safer and safer and safer. and having a solid plan in regard to each of the seed phrases, none of which are stored in my possession. Even a $5 wrench attack isn't going to do you any good. So even if somebody broke into my home and looted and pillaged and tore everything apart, there's nothing here for them to find. And living in a constitutional carry state, that would be a very bad idea for anyone to consider to begin with. But when it comes to security, we need to put that at the top of our strategies, especially in regard to our long-term holdings. The days of holding on a hot wallet online are over. The days of trusting exchanges to keep your crypto safe are over. Each and every single one of us is going to have to step up to a whole new level of responsibility if we want to weather the storm that's coming. Because we're not just going to sail into XRP going to $30, $40, $50. It's not going to happen that way. We're going to have a liquidity crisis. It's going to be horrific. And out of the ashes, you're going to see the phoenix rise. They're going to have to create a situation that is so ugly, which I believe will be a liquidity crisis. Then they're going to present the solution, which will be XRP, XLM, cryptocurrencies with real-world utility, basically saving the day and pulling us out of those ashes, and which will likely be a world that almost none of us could have imagined. But in my opinion, in regard to the average retail investor, less than 0.1% will make it to the other side. That transition is going to wipe out almost everybody. And out of 1,000 people that are invested, 1 will make it to the other side. But that's just my opinion. For additional information and exclusive perks, do consider joining me and the rest of our community on Patreon. So thank you so much for watching. I appreciate each and every single one of you. Good luck and have a great day.